All right, what up, everybody? You know who it is YRM. I just wanted to review the day real quick and we can go over some stuff. Uh, Today was a decent day in the SPY or ES, whatever you like to trade. Now, one thing I noticed today, which is kind of what I talk about, was like the broad information. We had a real clean one, so we stayed within last session Friday's range. So I really didn't have to draw anything. So that gave me good guidance. And then of course, like I said, I chart usually ES most of the time. So as we came into the day, I was watching. We had these zones we stuck between. Me, you guys know, I like to kind of wait the first 30, or I try to, until I have like a strong trend. I actually ended up taking a few trades early. Like I took a few scalps, but that's actually why I want to talk, because I want to talk about like some of the things I'm changing, at least just me personally with my trading. Nothing major, but like I noticed because Friday I took an unnecessary loss because I feel like I was just being stubborn. So one of them is trading for market conditions. I naturally love to scalp and day trade, but I'm more of a, when it comes to scalping, I like to try and get, from swing high to swing low. Like that's my my natural goal, or just my natural bias. So a lot of people be like, how do you hold so long? Like, but it's like I'm more of a person who's gonna let it go bad than get faked out. Like that'll be my natural tendency. So I ended up on Friday taking a few good trades here all around, but I lost my chart. I forgot which chart it was on, but wrote it up, scalped it on the way down. And what I didn't realize, I realized, but I played it wrong, where my best sell was here and I saw it and I had a BF and I just didn't sell until like here, and the theta burn hit me really hard. And then I doubled down having a bias. I was expecting us to take out a level of liquidity, which I had on one of my charts. And we didn't, we flew in reverse. So that caused me a major loss. So I'm gonna stop kind of forcing sometimes trend changes. When right here, even looking at it, I knew I was in a theta burn area. I guess it was just my own stubbornness. So yeah, I'm not doing that shit anymore because that wasn't fun at all. It was very frustrating. But I don't take losses that personal, but it was still like, it was dumb because I was up a lot. And just because I was trying to go for a higher trade, wasted it all. So yeah, so like today I was staying light and I was literally just taking small scalps that I saw until we hit the top of the BF and I saw the reversal. So this was like my best trade, which I added to. I ended up selling here. I think it was like somewhere in this zone. But what I noticed, we started to consolidate. So that's when I started drawing these boxes, which is weird because we randomly, as we did consolidate, we broke out of one box aggressively right here. But then we just came into another. But what I did notice, there wasn't a lot of FBGs being generated. Like it was just tight movement. So I feel like that's another thing I'm starting to notice. Like when I don't see the momentum or like the FBGs, I kind of been playing it cautious because I know like the speed of the move is not going to be there. And with futures and Forex, that's cool. But with options, the data is just going to kill us. So I've been just, being more patient and taking, what the market gives me at the time. Or I could have waited, but I'm to the point now, especially adding ICT heavily to my strat, that like an inside day for me isn't, much difficulty or choppiness to trade because I can get that leg. It's just more if I want to wait. Like right here, I wasn't even frustrated. I knew what we were doing. It was just, I was getting tired. I was like, man, I'm sleeping. I'm about to go to sleep. And sure enough, like around this area is where we broke out right before I woke up. Right before I dozed off. And yeah, I woke up and saw this and I was like, son of a, like me personally, I'm always looking for, an hour in like this. This was a whole hour of up movement. So these contracts, especially SPX, went berserk. A lot of FEGs, a lot of momentum. This is, what I try and look for. I just wasn't awake. I'm not really worried though, because we got a lot of opportunities this week coming up with the Fed talking. So it is what it is. This green line is the point of control. That's really good for if you're playing consolidation. So I'll use that, and it kind of acts like a rubber band in a sense for support and resistance, because price like slingshots above it, but it gets yanked back down to it, because this is where all the orders are really getting accumulated. So I use that a lot. Let me see. Yeah, so one of the things that especially if you're trading something like SPY, which is hella gives you, it's going to give you a lot of different price handles and movements and opportunities to make money. It gives you a lot of these. TTO. It's kind of like in my head, I'm always thinking like, what type of price leg are we going to get at each time? And is it going to be worth my risk reward? So like here, I was expecting more of a move that was going to grab this internal liquidity, but take us all the way back down to the bottom of the BF, because I'll use those two concepts together. So realistically, my risk was more like this when I set it up originally, is what I was aiming for. Like the top of these highs, something like that, like a really high risk reward. But it became a lot less. And once I saw the momentum slow down, like the last week or so, I would just be like, the momentum's slowing down, I'll hold. But lately, just because of the way the theta is playing OTEs, it's just not worth it. Knocks away a lot of your potential earnings. And I'm like, I'd rather sell the bulk of my contracts and then maybe leave a few runners for that, But I'm just kind of taking shorter trades until I see the momentum. Because today, coming in, I figured it wasn't going to be a super money on the dance floor day, because we kind of capped down or within range. So usually I look for those days, especially in a bear market where we have a high, we run a lot of highs and knock out a lot of liquidity, and then we start to consolidate. That's when I look for those days, because we have aggressive sell-offs. We have aggressive pumps in a bear market too, but I just feel like the sell-offs are easier to see because everybody just forces a pump, and after a day or so, people take profit. Obviously, brown informations are gonna, be the key to trading the SPY or ES, whatever you call it. And they just happen over and over. Intraday, there's constantly new ones being generated that you can be drawing and using for guidance for the next phrase or time frame. So I'll do that a lot, and I'll watch, time frame continuity to see where we're at. So like this right here, even though the strat would have been a later entry, you could have caught just off like the 30. So I was showing somebody early, like how it's weird. The 15 was a later entry than the 30. That was like the first time I saw that. But there's a 225 down here, which you could have transitioned into a 2230 up and still caught, the bulk of this move, even with a strat entry. Actually, your strat entry would have been just as good as your ICT entry right here, for the most part. $3 on like SPX end of day contracts. It's easily hundreds of percents, thousands of percents, depending on which contracts you're buying. Oh yeah, and structure and momentum is another thing I'm constantly looking at. So I'm always looking for break structures, seeing where the highs are going, where they're moving from. Like that alone can easily help you, because you can just see how the highs are shifting. Like, higher high, higher high, higher lows, higher high. Then we start to have lower highs, lower high, lower low, lower low, lower. So that can give you a clue already as to what price is doing. So I'll keep that in account. This is just the grand box. It shows me my discount premium area. And yeah, that's it. Like I said, I'm just taking a lot of shorter trades, being patient till I see the opportunity. Because I can still make money that way without being frustrated. But if that's like too much for you, I recommend on tighter range days, just don't trade, or don't trade the SPY. If it's a day that punishes you, don't trade. That's my new mentality. I haven't had a day that felt punished for a few weeks, but I remember it was a day where I was like, "Fuck, I'm getting punished. Like, I'm just gonna stop now. Like, if I don't feel it, I'm done. I'm not about to force it and screw myself up." But yeah, all right, y'all. What questions y'all got for me? Y'all can unmute. There you go. If y'all want to talk, y'all can unmute or type, whatever y'all want to do. Yo, like y'all about to talk, or how far SPX you going contract? Me, I be playing I play zeros, bro. So that's why if you don't play zeros, I don't feel you have to. But I'm playing zeros. Or do you mean how far out the money? Out the money. So end of the day, I'm going a few, but start of the day, I try and stay closer to the money, like 3 or 4 strikes. I think it's more like I don't even really look. I just know a price range. Like I'll look at the most expensive ones and see like one that's like $400 to $700, and I'm like, okay, this is a good level. Like I think it's more just experience. Like I'm not really hardcore analyzing, like we used to where we would like go to Thinkorswim. But end of the day, I'm probably a few out of the money because they all depreciate very cheap. But like once they get stupid cheap, I'm like, nah, that's too far out the money. I just as I'm coming into end of the day, the contracts I'm picking, I'm just looking for ones that look likely to go, if not in the money, like a strike or two out of the money. Because that's the thing with SPX, a lot of it is contract picking, especially in the day. If you pick contracts, you can have the movement right, and you'll see them sometimes because you'll see like 600, 700%, but you'll see one that's like zero or negative. That's because that one's just too far out the money. So a lot of it's kind of getting to know the contracts. But I feel like it's kind of, I was talking to actually Empowerment about that, and he was saying like it's kind of like a market inefficiency they have, like because like you're getting $10 of delta, delta payment versus $1. So that's like even if it starts at a 20 delta, the gamma's going to increase it, 20, 40, 50, 60, 70, 80 delta. So it's kind of like they have to, they just have to have that. But I like the end of the day SPXs, and I would have hit for sure if I played it. I just didn't. But yeah, what else y'all got? My bad, somebody had put Bank of America and ZOM. All right, cool. I think I have ZOM charted. All right, so we got ZOM green on the year. What is that? Inside quarter. I don't even know what all these old PTs are. Let me delete this. It'll be easier first. Let me look at XLE. I'm sure I have XLE chart. So XLE, we have what I've been talking about. Like, realistically, it was like a higher time frame TTO. When the quarter has sold off and everybody's making fun of us, we bought a TTO up, We had a little drop down right here. BF within. We did take out these highs. We have lows to take out. Let me look at the TC on this one. We still have green day, week, and we have a red month. So technically we have what, a week or two in the month? Yeah, 2 weeks in the month. The first 2 weeks we sold off, but now we're coming back up. This is a 2-2 potential month. I mean, a week on XLE. So we could technically 2-2 and flip the month back. So kind of like a little bit of conflict, just the way the candles are shaped, in my opinion, or way this dropped down. But this could just cause an outside week, to be honest. So, looks good. I guess I had an old trend line I had drew. We just slightly have fell out of, and we're at the top of the BF. So it's kind of seeing like, are we gonna actually TTO, break through this BF, or we're gonna fall? But we have more continuity technically is on the green. But when I see this wick, it just shows me sellers all in this area have existed strong. And we hit a high up here and got sold off from open all the way to here. So it's like to see a reversal. I mean, you have a day. You can technically trigger this little mini PMG setup right here. If we 2-2 on the day. We got a bunch of pivots. We got an FG right there. And then you got a 2-1 on the 4 hour. So this 4 hour trigger and targets, I'm pretty sure that'll be a day low. Yeah, it would trigger the days 2-2. Days 2-2 is like just a high. 4 hour entry. 4 hour entry would be right here. It'll be this orange line. At about 91. And days entry would be right above it. I'm sorry, 93, 52, 22. And the days is like 20 cents above it. So stack triggers right on top of each other. You target 1 and 2. And then we did take out a bunch of lows right here. So there's a newer, smaller BF. I guess you kind of like right here. Smaller BF, trend line. And on the VP, we're resting on the POC, which I like to see because I like to see us just bounce off of it. As soon as we start lifting with momentum, I know we're out of there. It seems like we got stuck here. I don't know if it's because of the FVG or what, but you can see price kind of like seemed like it consolidated like to a tighter range today. So yeah, almost like range contraction. So now it's to see if we're going to break out up or down, basically. It's usually how I play it. I just wait when I see the contraction forming. But we're already pushing up, which is a good sign. And we got more TC on our side. And then we got the fundamentals of XLE still. So, I mean, oil all year has been the leading sector. So it's been hard to go against them. And then Bank of America, let's see, XLF. Oh, wow. So I guess this was in a older channel. I remember doing this. But yeah, it was in a downtrend channel. It's starting to move sideways. Oh, that's what probably had drew it. I was waiting for the break because I was trying to see where the true bottom of this broad formation was, which it looks like the true bottom now. Because a lot of times when I draw my BFs, I'm using a tool. So it just matches them. So I can't draw them exact. Or I just won't know for sure where the true bottom is yet until it actually happens. Something like that. Yeah. Then what do we have? We have an FVG within the FVG. This one's actually just a regular gap though. But this is consolidated area. With Bank of America, what were you trying to do? What were you trying to swing it? Like what were you trying to do with Bank of America? Swing. For a swing, it could work. I would honestly, me personally, I'll probably like it above this high. That's a 2-2 month. 35 straight. Okay, so we're at the money. On the 2 week, I mean, we have momentum that's coming out of this little channel within the BF. So that does show me that we did hit the bottom. We have like multiple confluences and we created an FEG off the bottom. So that shows that was an aggressive buy. Especially I've noticed when price tends to hit the bottom of BFs, it usually makes a small candle like this. And usually this next candle is very large. And it's usually like a 1-3 or it'll be like a 1-2-2. That's a compounded 1-3. But this one straight just gapped up. So that shows there was a lot of buying, pressure at this level. Which I like to look at the volume too. So the volume spike was huge these few days. But yeah, me personally, I try and wait like just for like to see sideways action like this.
I'm like, I guess I don't know. You just never know who you know, like who you talking to. You can never tell. They're coming out from the fast. Like you never know. Like
this is all sideways movement right here. So like I'm kind of waiting to see what this would do. Me personally, especially on the swing. Maybe like this inside break. I would just be waiting for a break of all this whole area. So yeah, I would be waiting for a break like over this 34, like so 35 area, I guess, into this little mini gap. Because if we don't break this, we're gonna just drop right back down to the bottom of this consolidated area. What else y'all got? Nobody got no questions, nothing? No, quiet. Well, I'm gonna just be looking at tech tomorrow. I'm just gonna be looking at pretty much the big five of the SPY. I'm about to start doing that more because it's like obvious. If I play the SPY so much, I know what's gonna happen on the SPY. That shit leads, tech leads the SPY and vice versa. Apple being the heaviest weighted, and then Microsoft right behind it. I hit my DM, Lanisha. Microsoft being right behind it, but like today, I noticed early on Microsoft gave better price action, than SPY, and it's like the second day. I think on Friday it did that too. There's a few days I've noticed that, which I know people when I first started, I would see people always just trade Apple, but it just gave much clearer price action. Like that's what I tell people. Even if you don't know the strat, if you just knew some of the basics, you just saw there's TTOs that were happening the whole time. You have multiple pullback opportunities to get in and buy some lows. And then you could have just used TC and saw the hour and day with both green. And off the 30, I'm pretty sure we hit a low just like the SPY did. Yep. So at least for the first hour and a half, you really didn't have a real reason to get out. And we were getting momentum. So yeah, off of open, we ran 149 to like 152 before the first major pullback, which makes sense because I think the next strike for Apple contracts is like 152.5. So I guess it was more like a psych. I'm not big on psych levels, but I know obviously they work because a lot of retail people. So there was that, and right below it was 154, and the next strike for Apple was 155 even. So in those situations, you always want to, let's say you had like a 155 and you're pushing it to the end of the day, especially if you're on weeklies and it starts to sell off right here and you think it's just you hold it. In my opinion, it's better to just sell it because the data you're going to pay is not going to be worth it for the next day. And it's also good to know that realistically, like those strikes when they're close like that, institutions, the market, the composite man, whatever you want to call it, usually they try and do shit to keep it below that price. I've had that happen multiple times where like, I'll be $1 away on a Friday. I'm like, oh, for sure, this is going to hit Friday. I'm going to be in the money. And I'll wake up to a gap down. And then my contract will expire either worthless or I have to sell them at a loss only for like Monday or Tuesday if I were to roll them for that shit to run like $15. So when you need to sell into strength, especially if you're playing weeklies, because weeklies, they just depreciate so fast. Yeah, you start on bigger time frames. I'm trying to see I would recommend, like, it depends on how fast. Like me personally, I'm looking at like the 1, but I wouldn't probably recommend that, especially if you're just pure strat right now, because you're gonna just see a lot of noise. And you're not gonna see real combos. You're just gonna see a bunch of 2 up and 2 downs. But I say like I have a day set up most days. Like most days, my day looks like this. Like this is actually a day setup. This is a 212 on the 2-day chart. Actually, yeah, this is a 2-day. So 2 down inside 2-day trigger. I have my stop based off of recent lows that we came through. So I'll look, because stop wise, that's the thing with the strat. They don't give us the stops they give us would be too wide and too much risk. So like if you're trading common, this is 154. It makes sense to have only, you know, a $4 stop, because that's, you know, it's a very small percentage of the asset that you're losing, versus for us, that $4 drop, our contract is, you know, worthless. So I like to use my stops on recent lows, because I know regardless of if it goes or not, if it comes back to this area at this time, for me, the risk reward is so skewed. Just me personally, I'd rather just cut it and wait, maybe set an alarm, or just, you know, wait for it to return than to hold through this chop, because every tick is costing us money, you know, especially later in the day. So I like to use these swing lows. If price comes back past my entry, I'm cool, even though it's not ideal. But this is like the last level where, like, technically to me, this is like telling me my trade is invalidated. I'm just wrong. So I need to cut it. So always have a level where you're invalidating your trade, but then always be trying to gauge, you know, the risk reward of your trade. So it's like, I'm risking this to make, you know, this. So, you know, I have a 212 trigger in my first target. I kind of skipped this one because it's so small, and just knowing off the ATR on Apple, we're going to pass right by it. On the day, it has like a $4 ATR. So yeah, it lines up with this level. So that's my first target. So my stop is right there. Right now, it's like a 2.7 R. And then my second target would be this FVG area, which increase it to like a 6 R. Realistically though, we could, you know, especially knowing what we know with like ICT and all that, kind of like be cautious of this middle area, because price likes to reject inside of these FVGs a lot. So now, knowing that, I've been a lot more cautious when if I pass a pivot, I'm more cautious in this gapped area, because I know it's likely a reversal could form there. So it's cool that, you know, adding that adds a little bit of context, because a lot of times the strategists like will be mid BF and it will reverse sometimes, or just fail, and it's like, to my knowledge, nobody knew why. We just knew like, hey, it just failed. That's the pullback. But now it's kind of like, it gives us a lot more context as to why certain revs fell and certain BFs fell. But yeah, I think like the day, have like an hour, a 30, and a 5, a 15, a 5. That's usually how I do it. Like, I'll have my SPY chart usually looks like this. So I have a 3-pane chart, and then I'll have like ES will be like on a 1-minute chart. Like, I'll be on the 1, anywhere from 1 to 3. I'll usually rotate between that a lot. And I'm kind of looking at structure, looking at the levels of liquidity we're taking out, blase, blase. ICT confirms what? ICT I use for the entries. Technically, you can use the strat too, but like 9 times out of 10, you're like I said, today, the strat entry kind of matched up with the strat entry. But normally, realistically, an ICT entry is just going to be quicker than even a strat entry, as crazy as it sounds, only because like I was saying Friday, like with the strat, which nothing wrong with the strat at all, but just, you know, after a while, you just level up and learn new stuff. A lot of times we're taking, you know, we can't take entries until we're waiting for the breaks of these candles. You know, so there's a whole candle, then like this right here, this is a 2-1, I think. 2-1-2 safe entry per the strat. Of course, there's multiple levels. I can go down to a 5, but a 5, I'm gonna see a bunch of 2-2s, and then the 1, I'm not gonna see much that's gonna make sense strat wise. But usually with ICT, I can just see the levels of liquidity that we take out on the 1 minute, and just understanding like what I understand about structure and like how the market likes to grab the liquidity before it makes that aggressive move, and the different types of patterns that, you know, these institutions try to set up to liquidate us. You know, it's cool. It just adds to it. So like this is one I didn't even notice, but like I found out from someone, like usually when we have a strong uptrend like this, institutions are watching this and they're ready. So it makes sense that this dropped off after hours. We kind of surprisingly, retail sets up these uptrends which are like traps. But we just don't realize it until they gap down. But majority of strong uptrends like that end up gapping down after close, or just, even before close, a significant drop. But from what I've heard from someone who trades smart money, like on the inside, hedges and stuff love when we do this, because it's like someone's always left holding the bag, pretty much. So I'm just always mindful of that. That like, they're the ones really moving the market. We're just catching the crumbs. But like I said, it gives a lot more context, because I always knew we come to the top of a BF, we're going to reverse. We come to a bottom, we're going to reverse. But this gives me a lot more context as to like why and how we're reversing, because I know it's usually just a level of liquidity that got grabbed and big buyers stepping in. What else y'all got? This red box, which is some sideways movement, I noticed. And this was something I was thinking of last night. I was typing it, but I forgot to post it. If you look at the SPY, even on like less than, money on the dance floor days, like less than ideal days, even on somewhat sideways days, there's still like 2 or 3 $2+ legs. And if you get like a $4 move on SPY, even at the money, those contracts are like 200%. So if you can be patient and get those, 1 to 3 times a day, boom, you can clean up pretty well. That's what I usually wait for. So like this one got me though, because this one, it was just so slow that I was just taking multiple buys and sells versus just holding. But it's only because I had a little PTSD from Friday. It's all good. Yeah, here's another one. Oops. But you think, especially with SPY, if you just stay consistent and you're getting a few of these legs, even if you only went in with like 250, it's like what, 2 contracts, contract and a half, depending on where you get. You get 2 contracts here, here, here. Do that 3 times a day and hit like 100% to 200% or more, which we do regularly in this Discord. Even at the lowest 70% on a bad move, like from here to here was 70%. I remember my highest contract for like 75, 76. You figure that's like every day 750 to 1500 minimum off of like 2 contracts a trade. So I feel like if everybody stays consistent, like everybody in the Discord could be doing like 1,000 a day off SPY in a few months to weeks. Yeah, more than that for real. But yeah, minimum. I'm thinking like if everybody stays consistent and just really starts stacking and compounding their account, because I mean, thing with SPY, of course, you're gonna get some fake outs. No matter how good you are, you're gonna get just faked out or mental psychs out. But as long as you have enough BP left to counter, cut the loss fast, you can take advantage and really stack your account. And you can be using, like me, my account that I trade SPY with, I pretty much only trade SPY and sometimes Apple with it. Then I have another account for like swinging, or just regular stocks. But I feel like SPY and SPX are really good for compounding and gaining your account. And I've been just focusing on that. And I just like it. I've always traded SPY. It's been different times I've got mad, but like now I'm coming back to trading it heavy again, and it's really fun. And it makes it easy because I don't have to worry about making a list of 1,000 stocks. So, I mean, I have lists, but like it just takes so long sometimes to chart all those and keep up. Like, because for me, I noticed I would like have so many charted. Like the charting doesn't take long. It's just that I would have so many alerts triggers, like which one I take. Versus now, it's like I'm pretty much how I'm gonna do it, which I should have been doing a long time ago. I noticed people did it like all the time. I don't know why I never clicked. I'm just gonna have my SPY, which I trade 9 times out of 10. Then I'll have the big 5 in order. So it'll be the biggest, heaviest weighted is Apple, followed by Microsoft, then Amazon, then Tesla. So they all are going to move the same because they're all weighted heavier on SPY. They'll just have slight differences because some are going to have better or worse days, but it can help a lot because we have that advantage over ICT people. Because as straters, we already have a daily and weekly bias very easily. But we also, since they only trade like indexes and shit like that, they don't have anything to base, their bias outside of technicals versus us. I can see the correlation and momentum from like Amazon and Apple, moving up. So like midway, I remember I was thinking like, hey, we're gonna finish strong regardless, right before my last trade, but we're just moving too slow. But I assumed just by seeing the strength of Apple that we're gonna have a decent close. I didn't know how strong it was, but I knew like with Apple, like look at this uptrend. It was like more than a 40, it was probably like a 65-degree uptrend. Just seeing that gave me confidence on the SPY. Even Microsoft, we chopped just like the SPY and then we ripped. Amazon, we kind of did the same thing, but we pushed up, consolidated, dropped. So I feel like, especially like when you're just trading SPY, shit like that, as long as you're mindful of not getting stuck in these TB areas and taking the aggression, being right, you could do well. You could have been wrong here 2 times, but still had plenty of time, to realize that this was actually just a downtrend. So you had what, from like 7:30 to 9:30. You had 2 whole hours of just downtrend. Even on this day, and this was the quad witch day. I feel like not a lot of other things we trade are going to give you that many legs in a day. Same here. Money, oops. Money. Sideways movement, not worth it. All this right here, just TB area. TB is the theta burn zone, if y'all not familiar. This is where your contracts go to die. But right here, especially, was very good. So nothing is going to help you guys too. It's just keeping in your mind the time of day. So I'm always thinking the first 30 to an hour could be a strong trend, like we had today. Then the next, 30 to hour to 2 is going to be spent countering that strong move as people are selling off, or the BF has been created, or the high day, whatever you want to call it. This is a lot of things that line up are happening that cause price to reverse. Then there's lunch time, which is here. This is a good time, in my opinion, to get in for swings, which is why I was taking some oxy swings, because I'm looking for a lower day versus like entering a swing here for tomorrow and you're already at a higher day. So tomorrow you instantly wake up net negative, even if you're equal, because of decay. And then we have power hour and right before power hour. So I'm always sectioning my day like that. And I'm trying to force well, not force, but I'm just trying to get accustomed to trading the open again more, because I used to trade the open very well versus now I don't feel like I traded well. That's why I don't trade it. But lately, I've just noticed there's been a lot of days where we had strong movement and I'm missing out on hundreds of percents just waiting. So I just try to take advantage of whatever the market has to offer. I always told myself I wanted to be the trader who could do it all. So that's how I approach my trading. What else y'all got? Any questions, suggestions? Nothing? All right, well, I'm gonna get out of here. I'm looking tomorrow for a lot of stuff to just 2-2 on the day as far as tech is concerned. If we feel that 2-2, I'm just gonna adjust accordingly and trade dynamically. But realistically, I'm seeing a lot of shit hit lows, and I feel like we're gonna pump for a few days, maybe this week. But realistically, that pump I know isn't real, and it's gonna just be, a pump and retracement into this FVG before we drop to this lower level on the sell model. So that's kind of what I'm waiting for. That's why I even said on Twitter, because somebody was talking about a pump. I'm like, bear flag. Really see, like, this is kind of what I'm expecting us to get back into this next box. So retracement, drop them. I'm looking for the drop day, because that's going to be the money on dance floor day, where we can do 1,000% very easily. You can go on with size and change your account. I heard some people in here hit very high numbers and went in very heavy on the last one of these. So keep an eye out for those. Other than that, I'm about to get out of here. Y'all have a good night. Yeah, we're still doing, I mean, it's not even a challenge, it's just a way of life. But yeah, we're still doing that. The next mod, you know, I'm definitely looking to call it out if I see it. I just didn't see it today. And yeah, it's very easy. You go in on a mod, you go with your normal risk, like 5% of your account, 1%, whatever, 3%, 2%, whatever you use. Like me, I don't use more than 10% of my account per trade. Try and hit a 5 to 10x, split half the profits, go back in with the profits, because half of that, you know, you hit 500, you split half, you'd have made 250% for that day. At the house money and go in heavier the day before, and so on and so on. And do that a few times, you can really make some bread. Actually, I saw somebody do that. I don't think they were aware that it was a mod, but they just happened to hit like a few very big trades in a row on SPY, and they just kept going heavier and heavier. I don't know if it was beginner's luck or what, but the dude took an account from like, it looked like 700 to like 2.2 million very, very fast. So yeah. But all right, you guys, I'm out of here. If y'all need me, hit me in the group or DM me later. Deuces.